Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. U.S. Stock Market Sector Analysis and Technical Overview. This video presents a direct informational narration of the source document.
Looking at the market close on May 26th, we saw a mixed performance across the four major indices. That said, both the Nasdaq and Russell indices surged, with their closing prices officially setting new all-time highs.
Here's our agenda for today's explainer. We'll start with the broader market and Micron, then move into sectors currently sitting at new highs, followed by those showing breakout potential. After that, we'll cover defensive and variable sectors and wrap things up with a technical look at Tesla. Throughout this, you'll see the 11 S&P sectors strictly reordered based on their breakout potential and current technical structures.
Section 1. Market Overview and the Micron Breakout. The storage sector delivered a notably strong performance, really dominating the market landscape. Specifically, Micron saw a massive 19% surge. This was driven by a UBS price target upgrade, moving from $535 all the way up to $1625. To put that in perspective, this single move contributed over 1/3 of the S&P's total daily gain.
And as a direct result, by market close, Micron's market capitalization officially crossed the monumental $1 trillion threshold.
If we look at the current consensus expectations for Micron's adjusted earnings per share, projections sit around $58 for the fiscal year ending in August 2026. For the following fiscal year ending August 2027, that estimate jumps to approximately $100. Now, calculating a forward PE ratio is highly difficult right now, simply because storage market pricing and forward EPS are undergoing such frequent adjustments. On the technical side, previous resistance at the 778 to 813 level has been completely breached. The stock actually gapped up, opening at exactly 820 today, which means there is effectively zero overhead resistance left as it pushes toward new highs.
Section 2. Sectors at new highs. Let's examine the specific S&P sectors that are currently trading at all-time highs with no overhead resistance.
First up is the technology sector, or XLK. This sector is in a definitive all-time high trend. The key technical support levels are structured in clear tiers here. We have a first support tier between 170 and 179, a second tier between 155 and 163, a stronger third tier between 150 and 153, and finally a fourth tier down at 134 to 147. The price action we're seeing closely mirrors the highly correlated, high-flying semiconductor and storage markets.
Next, we have the real estate sector, XLRE. This one has maintained a high-level consolidation trend over the past month. The underlying support tiers are very well defined. Support 1 is between 42.3 and 43.7, Support 2 is between 40.8 and 41.9, and Support 3 rests at 39.7 to 40.7. Falling below that third support tier would signify a bearish turn, but for now it remains structurally robust as it consolidates near the highs.
Section 3. Potential breakout sectors. We'll now evaluate the sectors showing strong technical potential for imminent upward breakouts, which are primarily being driven by capital inflows and fundamental demand.
The industrial sector, XLI, is currently significantly overweight across the 11 S&P sectors. This is largely tied to heavy demand for electrical and hardware facilities linked to data center construction, which is actively pulling capital into the space. The current price is 174, with support sitting firmly between 163 and 167. The potential breakout range is identified as 169 to 177. If it successfully breaks above that 177 mark, it's positioned to continue pushing to new all-time highs.
Moving to consumer discretionary, XLY, we see an extremely narrow but structurally strong support block between 115 and 118. It's currently seeking an upside breakout in the 119 to 123 range. An important note here, this is the sector containing Tesla. A successful technical breakout for Tesla could act as the exact catalyst needed to pull this entire non-essential consumer goods sector upward right through that resistance level. Looking at utilities, XLU, the breakout target is between 46 and 47.3. Today's high reached 45.6, while immediate support rests just below at 45.3. It hasn't quite formed immediate upward momentum yet, but it definitely remains a potential breakout candidate. As for the communications sector, XLC, it needs a breakout above the 115 to 119 range to hit new highs. However, its lower support between 109 and 114 is visibly weaker. With the 200-day moving average approaching, breaking below that line could trigger quantitative selling pressure, making it the weakest of our current breakout candidates.
Section 4. Defensive and neutral sectors. These are the sectors currently experiencing slower accumulation, or they're trapped in somewhat awkward macroeconomic ranges.
Both healthcare, XLV, and consumer staples, XLP, require slow defensive accumulation strategies right now. XLV previously bottomed at 141 and has entered a rebound channel characterized by higher lows, though it does still face minor overhead resistance. On the other hand, XLP has been dropping toward 82.6, largely reacting to cautious earnings reports and forward guidance from major retailers like Walmart and Target. Both sectors represent a slow, sideways accumulation play. They could potentially serve as temporary safe havens if inflation expectations drop or if riskier tech sectors face sell-offs.
Meanwhile, the financial sector, XLF, is currently in a strictly neutral state. It's completely range-bound, caught directly between two strong lower supports and two strong upper resistances. The sector is essentially frozen right now, awaiting clarity on interest rate policies. While rate cuts are generally favorable for the broader macroeconomic banking environment, we know that early rate hikes previously boosted net interest margins for certain institutions. So, at this moment, the technical setup remains entirely neutral and sideways.
Section 5. Variable, news-driven sectors. For these areas, the technical direction is almost entirely dependent on geopolitical news and fluctuating global commodity pricing.
The energy sector, XLE, is highly sensitive to developments in the Middle East. With oil dropping to $96 over the weekend due to easing tensions, the sector faced immediate downside pressure. Technically speaking, an upside breakout above 60.8 would be triggered by geopolitical escalation. Conversely, a downside breakdown below 55.5, which would target 50 or even 47, would be triggered if international tensions continue to ease.
Basic materials, XLB, structurally mirrors the energy sector. International conflict news directly dictates supply chains and raw pricing here. An upside breakout above 53.2 will occur if supply tensions escalate. A downside breakdown below 48.7, targeting 45.5, will happen if those tensions ease. Both of these sectors are acting entirely reactive to external news at the moment.
Section 6. Tesla Technical Analysis. Let's address the persistent SpaceX IPO S1 rumors first. The document currently circulating is an incomplete registration version, not a final prospectus. Therefore, we're going to objectively defer any speculative analysis until actual amendments and concrete details arrive around the roadshow dates of June 5th to 10th.
Looking purely at the technicals, Tesla has a highly robust setup across multiple timeframes. It recently held a bounce directly on its uptrend line, and the 200-day moving average is maintaining its position perfectly. The monthly MACD has just formed a golden cross. Furthermore, the Tom DeMark sequential has reset, clearing out previous technical exhaustion. The upper Bollinger Bands represent future targets rather than immediate resistance, sitting at 49 on the monthly, 46 on the weekly, and 456 on the daily chart. Broadly speaking, these indicators support potential upward momentum without immediate overbought risks.
When we look at Tesla's historical consolidation blocks, the stock was trapped in a 3-month sideways phase from September to December 2025 and then fell into another 4-month block from January to May 2026. A technical breakout above the 465 level is structurally significant here. Crossing that specific threshold would completely break this prolonged sideways pattern and open up an entirely new phase targeting 498 and beyond.
So as we observe these strict technical structures and prolonged consolidations, the ultimate question remains: will speculative market capital finally rotate out of the current high flyers to fuel the highlighted technical breakouts in sectors like industrials and consumer discretionary, and specifically in individual setups like Tesla? We'll have to wait and see.